Assalamualaikum warahmatullahi wabarakatuh. Hello everyone, my name is Nuriyana Putri and my NPM is 2441127. So today I want to explain about accounting equations. The basic accounting equation is an equation that shows the balance between asset, liabilities, and equity. The accounting equation does not only record transactions that are directly related to asset, debt, and capital. The accounting equation can also be used to see the effect of income, expenditure, expense, and transaction. Accounting equation researches owned or controlled by a company are called asset. Examples of asset include cash, land, buildings, and equipment. Rights or claims for asset are usually divided based on two types of owners, namely the rights of creditors and the rights of owners. Creditors' rights are called company debts or liabilities. Owners' rights are called owner's equity. The relationship between the two forms an equation as follows: asset equal liabilities plus equity. The equation is called the accounting equation. This equation is generally written with the position of liability or liability placed before the owner's equity. A. Asset. An asset is a research that is owned or controlled by a business entity and is used for future benefits. Here are some examples of common asset. Number 1. Current assets: cash, receivable, and prepaid expenses. Number 2 is fixed asset: vehicle and buildings. Number 3 is intangible asset: goodwill, copyright, and patent. B. The liability. In the accounting equation, there is a component of an obligation or liability. Liability is the amount of money owed to other parties. A liability is a creditor's claim on a company's asset because this is the amount of asset that a creditor will have if the company is liquidated. An obligation, in the sample's terms, is the amount of money owed to another person or organization. Here are some examples of some of the most common obligation. Number 1 is debt account. 2 is bank loans. 3. Permanent credit LOC. And number 4, personal loans. And number 5, employee loans. C. Equity. Equity represents the portion of company asset owned by shareholders or partners. In other words, shareholders or partners have the remaining asset after all liabilities are paid. Here are some common equity accounts. Number 1 is owner's capital. Number 2 is withdrawal of owner's funds. Number 3 is employee loan. Number 4 is prepaid income. Number 5 is common stock. And number 6 is paid up capital. Form of basic accounting equations. Balance of asset and capital. Asset are asset owned by a company and are one of the sources for spending and for carrying out activities related to the company. Therefore, asset must be balanced with equity or expenditure sources. Source of expenditure obtained from the owner is called equity or capital. Asset equal equity. Liabilities plus equity equals liabilities. Resources used for spending from the owner are often referred to as equity. Source of expenditure that has been obtained from the creditor to the owner will be an obligation that will be returned. This is often referred to as an obligation or debt. So, in this element, the formula or equation is obtained, namely, assets equal liabilities plus equity. Accounting equation function. The accounting equation is very useful for knowing about changes in wealth in a company in every transaction that occurs. In addition, the function of the accounting equation is to find out some of the assets that have been used and spent in one accounting period. Analysis of the effect of transaction to the accounting equation is every transaction that occurs will affect the financial position of the company. Influence on this transaction can increase and also reduce the financial components of the company, namely asset, debt, and capital. Conclusion. Understanding accounting equation is a balance of two sides, namely between the left side asset and the right side liabilities, so that changes arising from financial transaction and the balance will always be maintained. The accounting equation equates a company's asset with its liabilities and equity. Application of accounting equations in business transactions, namely in financial statements, bookkeeping, profit calculation, and calculation of the amount of return on investment. So this is the reference.